Ever scroll through like tech news, and kind of secretly wonder, like, what would it take for me to be that founder? To like have one of those billion-dollar exits, those overnight successes we always hear about. But what about all those journeys, the ones in between? Well, today's deep dive, we're going behind the scenes to get an honest look, a refreshingly honest look at what it's like to be in the startup world, that whole startup grind.
Hmm.
So we're diving into this anonymous article from Intelligencer. It's called Confessions of a Middle-Class Founder. And right away, like, the first thing you realize is this isn't your typical techie founder story. Like, this isn't someone who, dropped out of Stanford at 19 to code the next unicorn or something.
Right from the start, it's clear this founder's journey, it begins with philosophy, a dream of being a writer, not exactly like Silicon Valley. Right.
Totally.
Yeah.
And I think that's something that probably resonates with a lot of people listening, right?
Yeah.
Like, you have these big dreams, maybe they're creative, maybe they're a little outside the box, but then that, like, reality sets in.
Yeah.
That fear of ending up broke.
Yeah.
Especially, like, if you're drawn to more artistic fields, right?
It's real.
The article, it even talks about this awkward dinner with some writer friends. Like, everyone's trying to avoid the check, which, let's be honest, we've all been there.
Tell me about it. Painfully familiar.
It really captures, I don't know, it's like this tension you feel like, how do you pursue your passion, but also, just survive, pay your rent?
Right. It's that balance. And the article, it connects this to this whole rise of the FIRE movement. Have you heard of this? Financial independence, retire early.
Oh, yeah, fire, yeah.
So suddenly you've got everyone calculating their number. Like, what's that magic amount of money I need so I can, escape the 9 to 5?
Okay, let's unpack this whole fire thing for a second. Because this founder, they land on $6 million as their, quote, escape number, which, I mean, on the one hand, sounds like a lot of money, but it also kind of highlights, like, the state of things, don't you think?
Absolutely. And you have to remember the context, right? This is the mid-2010s. We're talking like the afterglow of the Facebook IPO. Interest rates are practically non-existent. Venture capital money is just like flowing like water.
It's like the era of easy money, at least if you're in the tech world, it seems like. And our founder here, they're pretty upfront about the fact that they're more motivated by that financial freedom,
Yeah.
more than some grand vision of, like, changing the world.
Yeah, they're very self-aware. I'll give them that. And the article, it actually mentions this interesting framework from, I think it was an executive coach. They were talking about rich founders versus king founders. So rich founders, they're all about the wealth. That's the goal. Kings, on the other hand, are these empire builders. The money is just like a side effect.
Okay, interesting. So which one is our anonymous writer, you think? Which camp do they fall into?
I think at the start, they're definitely coming in as rich, right? Like they want to hit that $6 million. But as we get deeper into their story, you start to see how the whole startup world, it's got a way of, I don't know, challenging those motivations,
Yeah.
pushing you in directions you might not expect.
That's interesting. And speaking of unexpected, I want to talk about some of the observations this founder has about venture capital itself. Because they talk about how, like, back in the day, it used to be about funding, like, truly groundbreaking tech, like, the invention of the transistor, stuff that actually changed how we live.
Oh, absolutely.
But somewhere along the way, it feels like VC became less about that kind of game-changing innovation and more about chasing, I don't know, trends. The next big thing, even if that thing is, like, built on hype more than substance.
You're hitting on something really important here. And the article highlights the shift with this anecdote. The founder's trying to like pitch an idea, and they even describe it as like boring, but potentially super profitable. And their VC friend, they're only interested in one thing, the addressable market.
Which, let's be real, that's just VC code for how many potential customers are out there. Like, how much money can we make from this?
Exactly. And it gets to this whole thing of venture scale thinking, which is like its own language in the startup world. VCs, they're looking for those companies that could like explode, grow exponentially, become these massive, dominant players in their markets.
There's not enough to just create something that, like, solves a problem for a small group of people really well. You have to aim for this huge, often undefined market. Like, you almost have to buy into this tyranny of the power law kind of thinking, right?
Yeah. Yes, that's a great way to put it, because that's exactly what it is. It's this idea that only a tiny, tiny percentage of startups are actually going to become those massive wins. So investors, they end up focusing on the few that have that potential, even if it means that, like, most of their other investments fail.
It's like a high-stakes gamble.
Exactly.
So where does that leave our founder, then? They've got this, like, this boring but potentially profitable idea, but they're trying to navigate a world that seems obsessed with this whole venture scale mindset. So, like, do they play the game or do they kind of stick to their
Well,
guns?
it's not like our founder is like a typical disruptor type, right? Like they're
Right.
not trying to be the next Steve Jobs or anything.
Right.
They seem drawn to, I don't know, like practicality, which honestly, that might actually work in their favor, in this whole crazy world we're talking about.
Okay, so do they manage to, like, make this boring but profitable thing work?
Well, they actually find some early success, even with their less than sexy idea. They find a co-founder who gets it, someone who's on the same page. And the fundraising, surprisingly, it actually goes like way smoother than they expected.
There's that easy money era at play again, right?
Totally.
Like the article even mentions a VC, like investing after just one phone call. One phone call. I mean, were VCs just like handing out term sheets at coffee shops back then or something?
It's wild, right? It makes you realize how much things have changed even in like, what, less than a decade?
Both.
The founder even compares it to like their father's generation, where, back then, if you wanted to start a company, just the act of incorporating, that meant like physically mailing documents to Delaware.
Oh, yeah, I've heard those stories.
And now you can launch a whole company with a few clicks on Stripe Atlas.
It's insane how easy it is to, like, get started. But I guess that ease, it cuts both ways, right? Like, if the barriers to entry are lower, that means more competition and probably a lot more companies built on, I don't know, some pretty shaky foundations.
Exactly. It's like the difference between like, meticulously building a house brick by brick versus just like throwing something together overnight. I mean, both might stand for a little while, but
Yeah, which one is actually built to last, right?
exactly.
Okay, but let's get back to our founder, because now they've got this co-founder. They've got the funding, and they're, in the thick of it, building this company. So, like, are they living the startup dream?
Well, the article, I'll give them credit, it doesn't try to sugarcoat things.
Okay, good.
There are definitely those exhilarating highs, like when you get those first happy customers or you hit those product milestones you've been killing yourselves for.
Right.
But there are also like the inevitable lows, right? Product glitches, management headaches, like the emotional roller coaster that comes with, pouring your heart and soul into building something.
And remember, like, this whole reason this founder dove into this world was to, like, escape that constant anxiety of financial insecurity.
Right, right.
But isn't that anxiety, like, almost baked into the DNA of startup life itself?
Oh, absolutely. It's like they traded one kind of pressure for another, maybe even a bigger one, And what makes it even more intense is, from what the article hints at, their personality makes them even more vulnerable to all the emotional ups and downs of startup life.
Oh, how so?
Well, they're described as someone who, like, they need things to be right, They're
Mm.
very detail-oriented. And in the startup world, where everything is constantly changing, good luck with that, right?
That'd be tough.
Oh, yeah. So they're riding this wave, they're building this business, but then things get really interesting, right? Around 2021, we're talking peak tech bubble 2.0 now, SPACs, crypto going nuts. Suddenly, everyone and their dog is getting rich, often with ideas that seem, well, let's just say, less grounded than our founder's whole boring but profitable thing.
It was a wild time. It was.
Yeah.
Everyone had startup fever.
And that's where I think that whole rich versus king thing comes back into play, because our founder, who started out, very laser focused on hitting their $6 million number, they start to feel this twinge of, I don't know if it's envy necessarily, but maybe it's more like, wait, are those the rules now? Like, do I need to be out there chasing hype instead of, building something that actually makes sense, something sustainable?
It's one thing to, like, aim for financial security. It's another to just see people hitting the jackpot with what feels like a lottery ticket, right?
Totally.
So how does our founder react to all this? Do they, like, pivot to something flashier? Or do they, double down on their original vision?
Yeah.
So they're at this tech party, right? I'm picturing like one of those rooftop things, with the sweeping city views. Everyone's dressed to the nines.
Silicon Valley elite.
Exactly. And they end up like, talking to another founder. This founder is like the embodiment of made it. Like that level of wealth where you don't even look at the price of things anymore.
Living the dream, right? At least from the outside.
Right, exactly. But it's interesting because our founder, they asked this really like loaded question. They asked, what's it really like to be that rich?
It's such a pivotal moment in the article because you can tell they're grappling with something, It's not just idle curiosity.
Yeah, they're not just asking about like thread counts and private jet perks.
Right. They want to know, like, does that level of wealth, does it actually lead to happiness,
Yeah.
fulfillment? Like, what's the trade-off?
And what do they find out? What does this Magit founder say?
Well, they're surprisingly honest about it. Like, yeah, they acknowledge the perks, the freedom, all of that. But they also talk about this, like, dehumanizing aspect that comes with it. Like, people are always wanting something from you. There's this pressure to maintain that level of wealth, the fear of losing it.
More money, more problems, right? Like that old saying.
Totally.
Yeah.
But here's the thing. Even with that, like, honest assessment, that conversation, it shifts something for our founder. That $6 million goal that they had so carefully calculated, it suddenly feels, I don't know, almost insignificant.
Like the goalposts moved, and they didn't even realize they were playing a different game.
Exactly. And it just shows how, like, these external benchmarks, these ideas of what success looks like, they can really warp our perception, you know?
Sure.
Like, all of a sudden, building this sustainable, profitable business, it doesn't feel like enough in a world where everyone else seems to be chasing unicorn valuations.
It's like they're playing the long game in a short game world.
Exactly.
So where does that leave our founder then? Because the article, like, it kind of brings us back to the present day, right?
Yeah.
And things have definitely changed in the tech world since that whole 2021 craziness.
Oh, big time.
The bubble has, predictably deflated.
Yeah.
That easy exit, those IPO parties, it's all gone.
Yep. The party's over.
So what about their company? How are they doing?
So they're actually doing okay. Like, they're profitable, which is more than a lot of companies can say these days.
Right, right.
But that, like, life-changing payout, yeah, it seems further away than ever.
It's almost ironic, isn't it? Because what VCs are like now telling startups to focus on, profitability, sustainable growth, it's exactly what this founder had been doing all along.
I know. It's like they were almost too early. Or maybe they were just too grounded in reality to get swept up in all the hype.
Right.
And in a way, like, that might be their saving grace, you know?
Yeah, they actually built something real, something that works, even if it's not, grabbing headlines or getting them invited to those, like, exclusive Aspen retreats or whatever.
And I think that brings us back to, like, the core question of this whole deep dive, right? Like, what is real success? Is it just about hitting these arbitrary financial milestones, or is it about something more?
Right. Because the article, it doesn't really give us a neat answer, does it?
It really doesn't. It just kind of leaves you with more questions, which, I mean, maybe that's the point.
Maybe that is the point. Did our middle-class founder crack the code, or did they realize the code itself was, like, totally flawed from the beginning? Maybe real fulfillment, like
Right.
genuine success. It comes from building something meaningful, something lasting, even if it doesn't come with like $1 billion exit. Something to think about.
A
Right?
lot to think about.
Definitely. And on that note, we'll wrap up this deep dive into the world of startups, wealth, and I guess like the age-old search for meaning in the madness. Until next time.